Hello, this is Oliver for Everyday Finance. I'm going to be going over the top 5 ETFs that are currently trading for under $50. Those of you that don't know, an ETF can kind of be thought of as if a stock and a mutual fund had a baby. Just how like shares of a stock are available on the market, shares of an ETF are also available on the market, and how like investing in a mutual fund gives access to their diverse portfolio, buying a share of an ETF gives access to the diverse portfolio of an ETF. For any new investors, I would highly suggest using Robinhood. It has no transactional fees when you buy a stock. It can be used on your phone, and it's very easy to use. For all new investors, however, I would always say to max out your retirement accounts first before you do personal investing. This is just so you're eventually going to be able to retire. I do have a video that I'm going to link to in the description talking about the best way to max out your retirement accounts. Again, if you're a new or an average investor, I would always say look for just long-term growth over anything else. Short-term gains aren't going to be very useful if you can't constantly check in on your stocks. And all of these ETFs are going to be able to be purchased for under $50. There are two that are kind of just barely skirting by the definition though, and they're trading about $48, $49. The first ETF I want to talk about is the Motley Fool 100 Index ETF. This is just, for those of you that don't know, the Motley Fool is a website that has a bunch of financial information, whether it be from what's the best credit card for a person to how to tackle debt. The Motley Fool is just a very good place to get financial information from. It has not been around, and the ETF has not been active for more than 5 years, which is why I'm just going to kind of include this as a bonus one. But again, it has been trading over about 5% over the last year compared to the S&P 500, so I'd say this is a very good buy, especially for the price. But if you want to hold off and see if it continues with this growth, I wouldn't blame you. In addition, all the tickers for the ETFs can be found in the top left-hand corner, so they're easy to find if you want to purchase any of these. The next ETF that I want to talk about is the Global X Financial Tech ETF. This is an ETF dealing mainly with financial tech, whether it be the services, companies providing the services or actually providing the hardware itself. This has seen explosive growth. It also has not been open for more than 5 years. However, in the past few years it has seen that explosive growth, which is why I want to highlight it in this video. I say it's a very safe investment, and even if it does come down a little bit in the next coming months or so, just because of all of the trade wars, I would easily see it recouping those losses and even gaining and still keeping this kind of explosive growth that has been seen. The next ETF that I want to talk about is the PowerShares Dynamic Semiconductors Portfolio ETF. It's a very strong and well-performing ETF. It's one of those that I'm barely skirting by the definition of being tradable for less than $50. You can see towards the end of the stock history, nowadays it has a big dip. This is mostly due to the trade war with China. In addition, Qualcomm has been having licensing issues, which is also why you see such a large dip very recently. However, I again see that it's going to recoup those losses, and it's a very safe investment to invest in for the future. And if you want a proof of this, if you look to other ETFs dealing with semiconductors, they also have seen explosive growth in the past few years. And I would say that this one there'd be no difference with this one. You can also gain a lot of money by investing in this now. The next ETF is the ArcWeb X.0 ETF. Again, it hasn't been open for more than 5 years, but it's very close to. This has also seen very explosive growth that has far outpaced the S&P 500, and I would say this is a very safe bet as well if you want to invest in a very well-performing ETF. This ETF is going to be the PowerShares S&P 500 Quality ETF. This has pretty much matched the S&P 500. It's beating it out by about 0.3% or so each year. So if you just kind of want to get average market returns, this would be a very safe bet, and technically you would be beating out the market just by a little bit. And this would not have any of the concerns that the other ETFs with the trade wars, and they wouldn't have the same amount of volatility, even though generally ETFs are going to be a lot less volatile than any other stock. This final stock, the Spider Portfolio S&P 500 Growth ETF, I would have to say is probably one of the best ETFs that you can buy just in general. It's currently trading out just under $40, and it has seen very strong growth for the past 5 years, and I would assume that's just going to keep on growing in that way. It's been beating out the S&P 500 by about 4% each year for the past 5 years or so, and I would say this is a very strong addition to any portfolio, not only in terms of diversity, but easily in the next 20 or so years this could be trading above $200 or so, and if you invest in it now, you'll make a lot of long-term growth, and I would highly suggest anyone investing in their retirement funds or just even in general to buy up this ETF at this price point. In closing, again, S&PYG, the last ETF that I showed you, should be your go-to buy. If you want to compare, the S&P 500 is just under 50% over the last 5 years if you want to compare it to the other ETFs that I've shown. And again, just in general, ETFs are going to be a lot better than individual stocks for your average investor, especially if you don't have a lot of capital or money to invest, because that will give you a high level of diversity, which a stock would not be able to give. Thank you so much for your time, and I hope you have a great rest of the day. Goodbye.